So when we talk about foreign subsidiary, my good students, what you should always be knowing, we mute. Are you not muted? What you should always be knowing is this. So we have in this case here, for example, the parent company, for example, could be EABL Kenya. EABL Kenya, all right? And then in this case here, it has a subsidiary, for example, in Rwanda. In Rwanda, a subsidiary is in Rwanda. So of course, at the end of the day, these guys in Rwanda, this subsidiary in Rwanda is making sales using their functional currency, because people in Rwanda would want to buy its beer using the francs, their currency. But at the end of the day, as much as they're doing their sales, cost of sales in terms of what here the Rwandese francs, at the end of the day, they will still have to do a report to who? To the parent company, or rather, the parent company and this foreign subsidiary must be put together in terms of what year financial reporting. They must prepare what we call consolidated what year financial statements. So for that preparation then, the smaller one, the subsidiary, will be required to change its currency to what we call the group's presentation currency. And the group's presentation currency, of course, now will be the currency in Kenya. I mean, the parent is based in Kenya here. All right. There are three things that I told you that you should always remember. Whenever it comes to translations, you can forget about many things. You can forget about many things. Whenever it comes to translations, exchange rates to be used, ladies and gentlemen, if it is P and L items, should always use what? Should always use what? Like sales, cost of sales, anything that accrues like every time, oftenly. So like, like sales, you'll have sales like on a daily basis, and the exchange rate is changing every other day. So P&L items, you shall always use the average rate. P&L items always use the average rate. And then we have, in this case here, assets, liabilities. Talk of assets and liabilities. In the balance sheet, the assets and liabilities, we shall always use what here? Somebody, the closing rate. We shall always use the closing rate. Now listen. We have what we call net assets. Net assets, we're going to do them in two categories. We shall have net assets at acquisition. Translating them, we shall use the acquisition rate, that historical rate. At the date of acquisition, there was an exchange rate existing. That is the one that I shall use. And then, of course, we have what we call the closing end of year rate. The closing assets, we shall use end of year, what we are calling what here, the closing rate. So this will become so clear as we do these illustrations. So I would want to share something very nice here. Today we are looking at good things, only good things, good subject. And I'm going to start from a very low level, but I'll be able to move with speed to high levels. And then most importantly is that all of us will be very happy at the end of the day. All of us will be very happy at the end of the day. So this is what I'm sharing. So translating the subsidiaries, foreign subsidiaries, financial statements. So you're told the rules for translating an overseas subsidiary into the presentation currency of the group are as follows. Income, expenses, and other comprehensive incomes, the OCI. They are translated at the rate in place at the date of each transaction. You see, those are so many transactions. You cannot manage, unless it's a company that sells, say, this heavy-duty machinery, and you are able to sell like say 3 only in a year, all right, then those you can remember the exchange rate in those days. Ladies and gentlemen, when those transactions are very many, and indeed, we shall assume that our transactions are very many, the average rate for the year may be used as an approximation. We shall use the average rate for the year. Assets and liabilities are translated at the closing rate of exchange. So they've given us a very simple illustration to use here, just for purposes of understanding something here. This example runs through the chapter and is used to illustrate the basic steps involved in consolidating an overseas subsidiary. We are told Dragon bought 90% of the ordinary shares of Tattoo for DN 180 million. On 31st December 2X0, the retained earnings of Tattoo at this date were DN 65 million. The fair value of the non-controlling interest at the acquisition date was DN 14 million. The financial statements of Dragon and Tattoo for the year ended on 31st December 20X1 are as follows. Dragon is the parent, and you can see Dragon is based in America. They're presenting this in dollars. And now it wants to acquire, or rather it has acquired Tattoo, which is based in a country that even sometimes the examiner may not tell you. He's only telling you that Tattoo is using a currency called DN. So and then they have revenue, they have cost. Of course, it's a very simple example to start with. And then we have the statements of financial position for the two companies. There has been no intragroup trading. Goodwill arising on the acquisition of Tattoo is not impaired. The presentation currency of the consolidated financial statements is the dollar. Then they have given us the exchange rate. At the date of acquisition, this is end of year, and then we have the average like that. So for inclusion in the consolidated statements of profit or loss and other comprehensive income for the year ended 31st December X1, calculate revenue, cost. For inclusion in the statement of financial position, calculate property, plant, and equipment, investments, current assets, share capital liabilities. So we start with the group structure. We must always start with the group structure. Always start with the group structure. So how does this look like? It's Dragon, which bought Tattoo on 31st December X0. All right. So in this case here, we have Dragon, which bought Tattoo. Dragon that bought Tattoo. This will be a very interesting session. All of us will be very happy. But my students in this case here told me that, Mwalimu, you should not take a lot of time on this foreign subsidiary because it was tested last semester. Because it was tested last semester, that it can't be tested again. It can't be tested again. Do you belong to that school of thought? Are you in that same WhatsApp group with these guys? Are you in that same WhatsApp group with these guys that Mwalimu, we should even leave that subtopic away? Leave it. Leave it out. It can't count. It can't count. It can't count. And that has prompted me to do some videos which I'll be uploading on my YouTube channel, which basically are looking at like how do you get to pass in AFR on your very first attempt. I'll be able to do that video today. Once I get like 30 minutes, I'll do a video like how do you get to pass this. And one of the things that I'll warn against students is this thing of predicting the examiner so much. You and the examiner are never friends. Your examiner is thinking the same way you're thinking here. He knows that students know that given that this thing came last semester, it can't be repeated again. So in this case here, what will he be forced to do to score a goal against you? Bring that concept again. That's why some concepts like cash flows, these guys are repeating like every time you get students saying that this one cannot be brought. It has come for the last 2 seconds. They get it there again, and then they fail. And then they keep on, in this case here, blaming their village witches. And there's nothing really like being, it's about you not knowing the concepts because you made a wrong decision. You made a wrong decision. So in this case here, we have Dragon that bought what here? A company called Tattoo, Tattoo like that. So they bought 90%. 90% is really a controlling stake. It's high, more than 50%. So this is a controlling stake. So it means that Tattoo is a subsidiary. It's a subsidiary. And of course, Dragon will be the parent. Dragon will be the parent. Now, please listen, ladies and gentlemen. Please listen, ladies and gentlemen. The date of acquisition is very important. Date of acquisition is very important. The date of acquisition, we are told in the question. We are told in the question that the date of acquisition here is 31st December X0. 31st December X0. And then we have the date of the financial statements, the date of the given financial statements. So you can see statement of profit or loss, they are dated 31st December X1, 31st December X1, 31st December X1. So please, could you kindly tell me, how many months did we stay with this subsidiary in the financial year? Remember, our financial year is ending here. How many months? Can someone do the counting? How many months do we stay with this subsidiary? 1 year. It's exactly 1 year. So remember, if it's 1 year or more, there is no time proration. If it's 1 year or more, and we're working with the income statement, there is no time proration. So this makes me very happy. So once I'm that happy, I will not go to the required. I will not go to the required. What I will do, ladies and gentlemen, I will come right away here. I will come right away here and mention the name of the group. The name of the group. So this is Dragon Group. Consolidated. It's a fake income statement. Consolidated income statement. Consolidated income statement. Consolidated income statement for the period ending when? For the period ending 31st December X1. 31st December X1. 31st December X1. Here there are only 2 items. I told you it's a fake thing. There are only 2 items. And this is what I will do. There are steps, if you follow, you will really remain there for long and the examiner doesn't even mark them. So revenue, I'm consolidating. So I will take $1,200. So revenue, I will take $1,200 plus, in this case here, 600 DNs. This must be dinars. DNs like that. You leave it like that. Of course, I know later on I will be translating because the two are not compatible. I'll be translating, but you leave it like that. Remember, if you had stayed with this subsidiary for 6 months, I would have multiplied here times 6/12. Don't tell me to multiply this with 12/12. No, it doesn't make sense. Just leave it like that. I'm writing now the currencies here by the side because I would want to remember that, there is translation to be done. There is translation to be done. Abracadabra. From there, ladies and gentlemen, what do? We can see the next thing. The next thing is cost of sales. So we have here costs, basically. So costs, what do we have here? I can see cost, we have $1,450. So we have $1,000 plus 450 DNs. So then from there, I will have we don't have much, I'll have my profit. Remember here, there is no UPS, which will affect our cost of sales. There is no goodwill impaired, which would have come to be part of cost here. So this is a straightforward statement, really. So then, ladies and gentlemen, for purposes of, by the way, which currency are we going to change here? Are we going to change dollars to dinars or DNs to dollars? Which currency are we changing here? Because I've always gotten bright students changing currency of the parent. We don't do that. Parent in this case is the husband here. It is the wife who can move from their home to come and join the husband. Does it happen the other way around? Has it ever happened the other way around that a husband, in this case here, moves here from their home to join the wife? Does it happen like that? Does it happen like that? It's the end. It is a subsidiary currency to be changed to the parent's parent's currency, and the parent is using the dollar. So then I would want an exchange rate for moving this from the yens to the dollar. So remember, this is the income statement. Income statements are the ones who have told me that Mwalimu, if it's income statement, we shall always use the average rate. So go to the exchange rates given, pick the average rate. go to the exchange rates given, pick the average rate. Go to the exchange rates given, you pick the average rate. Go to the exchange rates given, you pick the average rate. They're here. Exchange rates, there are many, but I'll pick the average rate, which is, and again, to interpret this, you see, how do I read this? Can someone tell me this will be 2.6 what to what? This will be 2.6 what to what? 2.6 what to what? Don't tell me it is homeless or rather nameless. No. Look at the title here. So whatever you have here, these are dinars. It is 2.6 dinars to the dollar. So this is 2.6, so the average is 2.6. This is 2.6 dinars per dollar. So I would want to translate this alone, these figures alone. So the question is like, now this 600 here to be made dollars. Do I multiply or do I divide? Do I multiply? How do I exchange this? Do I multiply or do I divide? There's a teacher of mine, I always remember, the good thing with me, I've got very good memory. I'm able to remember what my high school teacher told me. You see, like now here, there is no way you will take a dinner. You know, these are 600. You know, someone will tell you, Manimu, multiply. You ask them why. But this will be 600 dinar times 2.6 dinar per dollar. You see, look at the answer. I don't even want to know what the answer will be. If the answer will be koso like this, but the final thing will be dinar squared per what? I mean, how do you multiply dinar and a dinar? You'll end up getting dinar squared. And we don't have, regardless of how powerful any nation's currency could be, there's no way it can ever be raised to any power. It can never be raised to any power. If you try telling that Museveni, we have Uganda squared, Museveni will just take you like this, beat you up. It's not possible for you to have any currency being squared. Whenever currencies are the same, like these are dinars and these are dinars, to kill them, you can't multiply. To kill them, in this case, you shall do what? You shall divide. And once, of course, you have known that we are dividing, then the division will be throughout. So divide by what here? 2.6 dinars per dollar. You don't have to write this now. Divided by 2.6 dinars per dollar. Alternatively, you can do it the long way. You can come and expand this. So this will be 2.6 dinar equals $1. How about 600 dinars? How about 600 dinars? Like this. So this will be 600 times 1 over 2 point what? Over 2.6. Over 2.6. Over 2.6. All right. And now they're giving me figures, these great people. They're giving me figures here, these great people. So in this case here, because there are no intersales, nothing, this was simply for us to understand the concept here that for the income statement, we shall be taking the average. Now that you've been able to take the average, then are you able to give me the values? Again, when you are getting values here, there is like a small abracadabra. I've never understood this. This is something that I've never understood. You will get another student, in this case here, telling you that, Mwalimu, we are supposed to put this bracket here, so that these 2.6 again affects. No. You need to get your calculator. You say 1200 plus 600 divided by 2.6, you give me the final answer here. You give me the final answer. Give me the final answer. Without putting brackets, without putting brackets, without putting brackets, without putting brackets. Please, everybody, punch your calculator. If I get you not punching your calculator for once, you'll allow me to punish you today. If I see you not punching a calculator, please, for once, I never punish my students, but for once, I would want you to allow me to punish you. Especially that student whose calculator, the calculator they are punching is ugali. If you're punching ugali for a calculator, but you are writing, when it comes in this case to punching your calculator, you're punching ugali like this, you should allow me to punish you today. Because everybody today is punching their calculator. Everybody is punching their calculator today. So it's 1430.77. So remember the answers here will be in dollars millions. So this is 1430.77. 1430.77. And then now we have cost. Cost, how much do we have there? Cost. We have just begun, my friend. Don't panic, we've just begun. I'll show you, we've just begun. You'll already leave like 1 or 2 lines space. 1173.08. 1173.08. So please deduct like that and give me the profit here. Deduct like that and then you give me the profit. How much profit do we have there? Deduct how much profit we have there. So I'm showing you the question right now. Let's relax. 257.69. Just that. You have learned quite a lot. 257. You may think it's nothing of learning, but you've learned quite a lot. 257.6 like that. 257.69. Thank you so much. So then, in this case, as well, the question that you're doing is here. In this book that everybody has this book. Everybody has this book. Now, ladies and gentlemen, let's come here. This one you will be able to follow on your own. How we are getting, for example, how we are getting the assets. Oops, did I go very far? You can see, for example, if it's property, plant, and equipment, we shall take 290 plus 270. But remember, if it's PPE, this is balance sheet. Balance sheet, you shall use closing rate. Closing rate. The rate which existed here at the balance sheet date. All right. In investments, they shall take 60 or 40, there's nothing there to be. Current assets, you shall take 150 plus 130 divided by what at the closing. But that I would want you guys to do for me. That I would want you guys to do for me. But why can't we do it pretty fast? Why can't we do this pretty fast? But the most important thing that I would want all of us here to pick, ladies and gentlemen, is this one here. Is this one here. The one that I would want you guys to pick, ladies and gentlemen, is this one here. From the same question, I would want us to get goodwill and translate it. This is the asset that I would want us to work with. Goodwill, and then we translate it. Goodwill. When the 2 is acquired, how much will the goodwill be? How much will the goodwill be? When the 2 is acquired, how much goodwill are we talking about? How much goodwill are we talking about? Remember how we normally calculate goodwill. It's very easy. How we calculate goodwill, it's very easy. To get goodwill, if it's a foreign subsidiary, this goodwill must always be computed in terms of FX, foreign currency. In this case, we shall use dinars. We shall use dinars first. So you compute the whole of it and then you translate later. The same case with net assets. So remember, to calculate goodwill, we look at the consideration paid by the parent. Consideration paid by the parent, blah, blah. And then we have consideration paid by who? NCI. I hope you guys are able to remember that NCI is non-controlling interests. NCI is non-controlling interests. So, of course, you'll be able to add the 2 if it's for goodwill method. You'll be able to add the 2 to get total consideration. To get total consideration, you add the 2. And then you will come under less net assets. At when? At acquisition. Net assets at acquisition. So net assets, are you able to remember net assets are the same as equity? Are you able to remember that net assets are the same as equity? Net assets are the same as what here? As equity. Are the same as equity. So in this case here, the equity components, we have ordinary share capital. The figure there. We have in this case here share premium. Share premium. We have a figure there. We have in this case, ladies and gentlemen, retained earnings. But for retained earnings, you have to be a bright student. Retained earnings, we are taking retained earnings at when? Remember here, we are not caring about was it at the 2 are always the same. So retained earnings at acquisition, you put a figure there. Then we have fair value adjustment, again at acquisition, you put a figure there, you deduct like that, and then you're able to get what we call goodwill at acquisition. Goodwill at acquisition. Goodwill at acquisition. Goodwill at acquisition like that, which you'll be able to impair. And then you proceed. You'll be able to impair this, and then you proceed. So before I show you about how to handle the other assets, let's first of all tackle this one, because you've seen in foreign currencies, foreign subsidiaries, examiners telling you, hey, calculate goodwill for me. And most students in this case here are able to open up their eyes like this and they see total stars. I mean, somebody just becomes static. The only thing you see them doing when you're in invigilator is to see them in this case here scratching what here their hairs. They even spoil their hairs. They spoil their hairs, courtesy of a bad examiner. But remember, like, I mean, if it's a foreign subsidiary, how do you get into goodwill? Just do everything in form of what your foreign currency, in form of foreign currency. Let's see how many of us will be able to calculate this goodwill. And I think I should start giving those presents that I used to give. Nowadays, it's like, Mwalimu does not give presents. What happened to Mwalimu? Mwalimu should start giving presents again. Yes, and today is the time. Today is the day to give those presents. All right. Now, out of this information, I'll be able to calculate this goodwill. I'm told that Dragon bought 90% of the ordinary shares of Tattoo for DN 180 million. On 31st December 2010, the retained earnings of Tattoo at this date were DN 65. The fair value of NCI, I mean, we have so much there. Let's start, ladies and gentlemen. In this case here, we compute these. Please take a screenshot and then ensure that you are able to give me the values when I ask you to give me the values. Please take a screenshot here. Please take a screenshot here. Take a screenshot there. And then, ladies and gentlemen, we should be able to get this goodwill pretty fast. Imagine goodwill hakuna kitu. Because goodwill, unaangalia tulilipa nini, na tukapata nini, tulilipa nini, na tukapata nini, tulilipa nini, na tukapata nini. Excess rate of goodwill. So, for example, we have got two owners here. We have consideration paid by parent. And remember, this figure must be in Forex. Forex is the dinar. So in this case here, how much the parent paid for its 90% stake? Consideration paid by the parent. Is there somebody who can assist me here? Consideration paid by the parent. 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 180. M is giving me 180. But is it in form of dinars? Is it in form of dinars? Yes, it's dinars. 180 dinars. So in this case here, 180. Do we have these other guys? Yes. Remember, we only bought 90%. There is another guy who bought non-controlling. So give me the consideration paid by non-controlling interest. Remember, this is the fair value of NCI. Fair value of NCI at acquisition. Is there somebody who can see the fair value of NCI at acquisition here? Is there anybody who is able to see? All right. Sorry for that. We need to be having the book. Sorry for that. So do we have some students here, of course, who are in this, and perhaps they are in the AFR special revision class? The students who are in the early morning, please share that book in the AFR special revision class. Share it there. And then, of course, the evening students who are in the AFR special revision, pick it and put it in the evening. Let's sort out this issue here because I will not remember to do it later. So the early morning students like Paul, I know you have the book. Just go and tap, sending the book straight out to the AFR special revision. And the students who are in the AFR revision, special revision class, tap like this, take it to the evening class, the evening class. Is there somebody who has been able to do that? Do I have good students? Alango, before getting the page number, first of all, do what I've told you, Alango. We must help. We must help others. Alango, have you been able to send that book to the AFR special division? Everybody must have that book of ACCA because of practice. This book, whatever is there, is what is being used in practice. For the students who want to practice AFR, to practice financial reporting, you can't survive without that book. And that book is very expensive. It's about 7,000 Kenya shillings, that book. 7,000 Kenya shillings. So you simply get it, print it, and bind it. And I want every student that I'm teaching to practice either financial reporting, taxation, or auditing. But I'll be advising you about that later. All my students must practice those disciplines. Now they have received. Now, if you have received, thank you very much. The one who shared to the special, now they have received. Now they have received. Thank you very much. So if you have received, please go to this page number. Now, Alango, now you must be happy. 483. Page number 483. Page number 483. Page number 483. Page number 43. Page number 43. So I hope everybody now is happy. Page 43, everybody's happy. Now they're giving me the fair value of NCI at acquisition, and these ninjas have given me a figure of fair value of NCI at the date of acquisition was 14 million. So dinars, 14 million. Dinars. So the total consideration will be 194. Total consideration. Total consideration. Total consideration. Of course, this is in the form of dinars, 194. And then we'll come and less net assets at acquisition. Net assets at acquisition. So you start with ordinary share capital. Remember, it is net assets of who? Net assets of the subsidiary. Net assets of the subsidiary, which is foreign based. Net assets of the subsidiary, which is foreign based. Thank you very much, Ross Mudone. Oh, please share. You haven't yet shared to the evening with the evening students. Please share with the evening students. There's some evening students who are not in the SPR group, but I would really want all of them to be that group SPR. You're only paying 800 Kenya shillings to be that group. You're only paying 800 Kenya shillings to be that group. I mean, if Mwalimu was to come today to your local area, you can't buy Mwalimu lunch of 800. You can't buy Mwalimu lunch of 800. No, I can't continue before the evening students receive. Nancy, I'm depending on you. Are you able to share there? And then I am told, share. Thank you very much. Nancy never disappoints. Now, the evening students, are you comfortable? The evening students now, are you comfortable? The evening students, are you comfortable now? Thank you very much, Ernest. Great. Great. Thank you very much. So the ordinary share capital that we have is here. The ordinary share capital that we have is here. Ordinary share capital. So the share capital, which share capital do I pick? Do I pick 10 or 5? Do I pick 10 or 5? Remember, it is equity of the subsidiary, which is 2. So it is 5. So it is 5. It is 5. It is 5. So in this case here, we have ordinary share capital. It is 5. Share premium we don't have, but I can see we have retained earnings. So retained earnings, I would want you to go and write this figure there very fast. Very fast. Let me see how many guys are very fast in writing these figures. Retained earnings, I would want you to go and write that figure of 215 very fast. Write the 215 figure there very fast. Very fast. Very fast. Very fast. So as you write it that first, remember for retained earnings, we take retained earnings at acquisition. This retained earnings is retained earnings at reporting. These retained earnings at reporting. And yet we are told by the standard when computing goodwill, take retained earnings at acquisition. Is there somebody who is able to see the retained earnings at? They will always tell you somewhere. And if they don't tell you, you should both know how to calculate this. So Rasema, the retained earnings of the 2 at this date was 65. Was 65. Was 65. So please do me a favor. If you had written the bad one, go there and rub very fast. You write the correct one, which is 65 here. We don't have any fair value adjustment. No fair value adjustment. No fair value adjustment. So then are you able to tell me in this case here what the goodwill is? Goodwill at acquisition. Are you able to tell me what goodwill at acquisition is? I can see Alan laughing there, and I'm so sure he's not alone. He's not alone having in this case here rubbed the figures. I'm so sure I've nabbed like 20 of them, 100%. When this is giving me even 124. This is 124. There is no fair value adjustment. Now, after you get this 124, do we have any impairment? There is no impairment here. There is no impairment here. So impairment loss, 0. So impairment loss, so we have goodwill at acquisition. Goodwill at acquisition. Goodwill at acquisition is 124. Is 124. And then we have impairment loss. Impairment loss, they've told us is nil. And then we'll be able to get goodwill at reporting. Goodwill at reporting. So goodwill at reporting here will be 124. Goodwill at reporting will be 124. Abracadabra, from there you are told once you have gotten goodwill, hey, it's in foreign money, return it to home money. Here we are assuming like we are Americans, all of us, because the parent company is in America. So in this case here, convert the dinars to dollars, So you talk of what here, translated goodwill. We talk of translated goodwill. Translated goodwill. You talk of translated goodwill. Translated goodwill. So now it's from foreign to home. If I were you, I would talk about FX to home. FX to what we call presentation currency. FX to presentation currency to home currency. Home, remember, home is where the parent is based. Where the parent is based. So abracadabra, we copy this the way it is. We copy this section alone the way it is. So we have here goodwill at acquisition. Goodwill at acquisition. We have impairment loss. Impairment loss. We have in this case here goodwill at reporting. Goodwill at reporting. So then we have goodwill at acquisition is 124. These are dinars. Here we have 0 dinars. Here we have 124 dinars. So in this case here, we go ahead. Of course, we have started by dividing. So I know most of the times I'll be dividing. So then, gentlemen, I want to translate the goodwill at acquisition to dollars. Which exchange rate do you think will I use? Because here I use a different exchange rate, here different exchange rate, different exchange rate. So goodwill at acquisition, which like these people will give you like 3 exchange rates at the bare minimum. We must have exchange rate at acquisition, at times called historical. Then we must have a closing exchange rate. Then we must have average exchange rate. So in this particular case, we are using historical when we acquired the subsidiary. So when we acquired the subsidiary, Alango is giving me a figure to use there. Alango is telling me, Mwalimu, for acquisition, for this goodwill at acquisition, we have this when we acquired. We have these 3. So use 3. And then end of the year, use 2. And then average, use 2.6. Watch out one abracadabra. So here, I'm using 3. Here, I'm using 3. Here I'm using, ladies and gentlemen, 2, and here I'm using 2.6. 2.6. Now, let me ask you, great students, a question. Of course, I know all of us appreciate that goodwill at reporting, I shall use the closing rate, isn't it? Goodwill at reporting, to translate it, I shall use closing rate. That one is okay, right? Goodwill at reporting, to translate it, use the closing, or what we call the balance sheet rate. I hope that one we are okay, all of us. All right. How about this one here? Impairment loss. Even from this language, it's a P&L item. It's a profit and loss item. And the profit and loss items normally we normally use average exchange rate. We normally use average exchange rate. Anytime we talk about profit and loss items, we normally use average exchange. What here? This one here, average exchange rate. 2.6 like that. 2.6 like that. Mimi siwafeel leo. Nasikia vijana wakiniambia siwafeel leo. Sijui kama tuko pamoja. Nina watu wachache wanaongea kama Lango, Nancy, we have another one called Evelyn. Wengi leo siwafeel. Siwasikii totally. Are we able to put on our cameras a little bit? Today, Mwalimu would want to see your faces. Today, and Mwalimu is very serious. Today, Mwalimu would want to see your faces today. And Mwalimu is very serious today. Thanks, Dave Awino. Great. Already great. Today, Mwalimu is seeing all his students' faces. All of them. Thank you, Anne. Great. All of them today, Mwalimu is seeing them. Leonida Matunda, great. We have Morgan, Mr. Morgan. PK Kasling. Today I'm seeing my students today. Today is the opportunity. But I can see most of them again, their cameras are not on. Why? What is there to fear? All these guys, their cameras are off. Queen Magdalene, Esther Alubi, Blessings. I have 801 for 40. All these cameras are in. Oh, background bara. Why? Tuko chini ya mti yule uko pale pazuri. Would want to see that, I mean. Average currency, is it used specifically? No. Multiple. No. Balance sheet, you don't use average. No shirt, okay. No shirt, we don't want to see you. Without a shirt, we don't want to see you. Okay. So thank you very much. Let's now, in this case here, put off our cameras then. Let's put off our cameras. Now, at least now I've managed to see most of your faces. And I can place, in this case here, a face to a name. Like Leonida, I've seen you. I've seen most of you. Great. Like we have Dave Owino, I've seen you. You're not a very young man. Great. Others have seen, they're very young, 21, 22 years. We shall overcome. That's what we call diversity. Now, remember, the person asking whether average is for the balance sheet. No, average is for the P&L. Average rate is for the P&L. Remember, P&L things are not fixed. P&L stuff, they keep on, in this case, here, rising like every other day. Every day I'm making a sale. And the exchange rates, of course, are also rising every other day. It's fluctuating, not fixed. That's why for P&L, we shall always use what year? We shall always use average. But anything that is fixed, like we know we acquired this subsidiary on this historical date, then I should use the historical date. If it is assets we have at the end of the year, then I should be able to use the end of the year exchange rates to translate. All right. Then can you kindly go ahead, and I hope you remember why we are dividing, because this is 3 dinars. 3 dinars equals what here? $1. How about 124 dinars? How about 124? It will be 124 divided by 3. Once I've known that I'm dividing here, then the division will be consistent. So then I'll be able to give you these figures pretty fast to my good students. The first one, according to Juliana, whose video I never saw. 41.33. So now they are dollars. 41.33. Now they are dollars. How about this average? Of course, loss. This will be 0. This will be 0. This will be 0. And ladies and gentlemen, we have goodwill at reporting. 124 divided by 2 is quite an easy one. At reporting is 62. At reporting is 62. 62. Now, please listen. How I wish my board was big enough. Normally, what we do here, we'll come and add these two. You add the 2. You add the 2. You add the 2. You add the 2. You add those 2 numbers. When you add those 2 numbers, you will get what we call expected goodwill. We have expected goodwill. The expected goodwill, in this case here, is 41.33. These are now in dollars. And then you compare this with the actual, the closing one, the actual goodwill. So the actual goodwill is 62. What is the difference? What is the difference? What is the difference? What is the difference? Exchange difference is 20.67. Is 20.67. 20.67. But now remember, we can't, this 20.67, ladies and gentlemen, I can see it's a growing. It's a growth here. So this is a Forex gain. Is a foreign exchange gain. Is a foreign exchange gain. But remember, any gain we get, we must always share the gain to 2 individuals. We know the 2 owners. So in this case, you go ahead and share this. So in this case, the group share, we have it, or you use the name parent. So you say parent share. So do you still remember that the parent had 90%? Oh, they have forgotten. Do you still remember that the parent had 90%? 90%, thanks Mary Washira, 90% of 20.67. 20.67. So then this will give me what here? 0.9 times 20.67. What do we have here? Oh, I'm alone. According to Nancy J, it's 18.6 something. 18.6 something. So this, remember, is being shared out. And then we have NCI's share. NCI share, we shall have 10%. 10% of 20.67, which gives me 2.07, something like that. NCI share is 10%. 2.067, something like that, yes. Oh, I'm alone, but I'm overcoming. I'm overcoming. Remember here, we expected an asset to be smaller, 41.33. But we got an actual, which is what here, higher. So it's a gain. It's a gain. So when we go to our group equities, we're going to have what we call foreign exchange reserve. So under foreign exchange reserve, from Goodwill, we shall book the parent share. This one here, 18. That Forex reserve will have two things. We'll have, in this case here, something coming from Goodwill, and it will have something coming from net assets. Net assets. But I'll explain that better when we go to the actual consolidation. So up to here, somehow, it doesn't have to be like 100%, but somehow, are we okay? Up to here, somehow, are we okay? Somehow. All right. All right. Now, ladies and gentlemen, from there, what I would want us to do is to look at now the net assets of this group of companies. I would want us to evaluate, because we can't acquire a subsidiary without evaluating. A subsidiary can only be acquired on evaluation to know the perfect price. So then we need to look at the net assets of what here? The net assets of the subsidiary. So we have here net assets of the subsidiary, net assets of the subsidiary, net assets of the subsidiary. So for the subsidiary, net assets, you have to give us net assets at acquisition versus net assets at reporting. So we have here net assets at acquisition, and the net assets in this case here at who? At reporting. I was almost saying at disposal. When we dispose, we will always have a column of assets at disposal. Here we are disposing our subsidiary. We are comfortable with it. And remember that net assets, ladies and gentlemen, these are equity components. The ordinary share capital, we have in this case the share premium, we have any fair value adjustments, we have retained earnings, we have UPS, especially if it's we shall be looking at that upward. But here we don't have UPS. Here actually I've got nothing. I want you guys to do me a favor. I want you guys to look for the share capital, and then of course retained earnings, share capital and retained earnings. Those two only are the ones we have because we never did any fair value adjustments. There wasn't any revaluation in this question. I thought it was a simple question to simply enable Mwalimu put some point home here, because my early morning students, I taught them this concept and then I gave them some homework. Some guys in this case here did send a solution that I'd asked them to do. About 4 of them were very correct. 2 of them really were off the road. And then of course the class has 100 and about 70 students. So what does it mean of the students who never sent anything? They never understood even nothing. That's why I asked myself, if this thing is very hard, let me get proper. And then I looked at this SBR book. I got good content here. So let me start this thing from scratch. All right. So I would want you guys to do me a favor. From this book, please give me the share capital of the subsidiary. Tattoo. Share capital of the subsidiary at acquisition and share capital of the subsidiary at reporting. Abracadabra. I can see even somebody thanking me there. Nancy Wongo, or rather Nancy has given me the total, yes. Nancy has given, share capital does not dance. Share capital is just like accountants. You know, since I started teaching, I've never seen even a single accountant who knows how to dance. They are as rigid as share capital of a subsidiary. So share capital of a subsidiary from acquisition all the way to reporting, it will be 5-5. This does not change. Share capital at acquisition is 5 here, 5 there. And then we have retained earnings. Retained earnings will change. So we have retained earnings at acquisition, Retained earnings at acquisition. So retained earnings at, this one is retained earnings as at the balance sheet date. This retained earnings at reporting. This 215 is what I will carry with me, and then is the one that I'll be able to come and put here. 215 at reporting. And then we have retained earnings at acquisition. Retained earnings at acquisition. Retained earnings at acquisition. So retained these fellas will give me the figure. Retained earnings at acquisition. Retained earnings at acquisition, we had 65 dinars. 65. There's one thing I forgot to tell you, ladies and gentlemen, that this subsidiary is based where? Is based outside there. They're using dinars. So in this case here, always net assets shall be on the basis of FX. FX means foreign exchange, foreign currency. Foreign currency. So abracadabra, is there then somebody who is able to give me these figures? Abracadabra, is there somebody who is able to give? They're telling me, Mwalimu, no. Mwalimu, no. Mwalimu, no. No, I'm correct, because I can see people have picked 215. I'm correct. I'm correct. So they're telling me that the first one is 70, isn't it? The first one is 70 and 220. This young man called Paul never lets me down. He's very active. He's very active. Very active. And that is what AFR needs. AFR does not want you to be very bright. AFR wants you to be a keyboard warrior. If you're a keyboard warrior, someone who fears nothing, even if you get it wrong, so what? If you're a keyboard warrior, somebody in this case here who is very brave, you will never fail in this paper. If you're not able to understand anything, simply put up your hand and say, Mwalimu, you cannot progress until I understand this. Ask questions, raise a hand there, use emojis like there are these emojis. You know, there are two emojis. We have this emoji that is smiling. The person is very happy. By the way, this is very good, especially when you're understanding. You know, you're understanding things. You don't even have to be, you can even be sending us this emoji saying, I'm okay. I'm laughing, I'm okay. And again, if you're not understanding anything, use this other emoji often. Like now you are very sad like this. You can even get one that has tears like that. Very nice. Very nice. Very, very important. Very important. It's a good way of what you are communicating. A good way of communicating. All right. Now, ladies and gentlemen, please talk to me this afternoon. Are you able to see that the net assets have grown? Is there somebody who has been able to see that the net assets have grown from 90 all the way to 200 and what year? 20. Oh, yes, they've grown. What name do we give to that growth? What name do we give to that growth? You keyboard warriors. Keyboard warriors. It's PAP, yes, it's PAP. So in this case here, we have what we call the post-acquisition profit. So we have the post-acquisition profit, which is PAP, is 220 minus this 70. So we have, ladies and gentlemen, here, the post-acquisition profit, you write it in full. Post-acquisition profit is 220 minus 70, which then at the end of the day becomes what here? 220 minus 70. So according to PK Kasling, quite a big name, 150 like that. 150. Now, when it is listen, of course, at the end of the day, I will divide this. I will divide this independently. But if I'm the one doing this, if it's a foreign subsidiary, once I get this, I'll go ahead. Okay, let's first of all use the concept that we're used to. So go ahead and just divide this. Go ahead and divide it out. Go ahead and divide it out. Go ahead and divide it, share it out. So share it out to the parent. The parent in this case is 90% of 150, which gives me what here, somebody? 90% of 150, which gives me 135. 135. And then we have in this case here the subsidiary, not subsidiary, but NCI. NCI people, these guys are getting 10%. 10% of 150 is 15. It's 15. But if I were you, I would use the yellow highlighter and highlight these two. I'll use the UDA's highlighter, yellow highlighter. Highlight those two. And I don't know where to write that I will not. When I'm doing my translations, when I'm doing my translations of net assets, I shall not use this. For now, when I'm doing the translation, this will be hot air, hot air. This will be hot air. This will be hot air. Okay. All right. I can see a good question there. I'll be able to address it. Please allow me, first of all, to finish this. Now, and gentlemen, once you have done that, now you'll come and tell us there, translated net assets. So translated net assets. Translated net assets, you start with net assets at acquisition. Net assets at acquisition, we have 70. We have in this case here PUP, add PUP, 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 PUP. You guys gave me a figure of 150, 150. And then, ladies and gentlemen, we have in this case here net assets at closing, net assets at reporting, net assets at reporting. You guys have given me a figure of 220, if you remember. If you remember. So remember, these are in form of dinars. Dinars. So let's exchange here. Let's exchange here. Are you able to give me figures now that I will use to be able to get the translated net assets? Translated net assets. Are you able to give me the figures to use? So net assets at, all right. Nancy is telling me use 3 here. Use 3 here. And the same Nancy is telling me at reporting use 2. This Nancy seems to be a very good student. How about this post-acquisition profit? How about this post-acquisition profit? How about the post-acquisition profit? Use 2.6, PAP, use 2.6 because post-acquisition profit is a profit item, is a P&L item. If it's a P&L item, we shall use here 2.6 like that. So now you're able to give me these figures in form of the presentation currency, the dollar, in form of the presentation currency, the dollar. Average, thank you, Evelyn Obonyo. Majina makubwa makubwa. All right. All right. Please give me the numbers very fast. Please give me the numbers. Dave Awino. Dave Awino is 23.333. 23.333 like that. And then we have the post-acquisition profit. This one 50 divided by 2.6. Do you remember the figure? Do you have the figure? V tells me 57.69. 57.69. 57.69. And then lastly, ladies and gentlemen, we have here to 20 divided by 2. Divided by 2, which gives me 110. 110, like that. Now, ladies and gentlemen, why am I dividing? Because the exchange rate, like here says, 3 dinar equals $1. So then the question is, how about 70 dinar? How about 70 dinar? So if I'm cross multiply 70 divided by 3, so I'll realize straight away that this exchange rate I'm dividing to get to my presentation currency, which is the dollar, which is the dollar, like that, which is the dollar. Now, ladies and gentlemen, if you try adding this and they will not agree, they will not agree. They're not agreeing simply because of what here, some foreign exchange gain or what here, loss. So I want to give you exactly 2 minutes to see whether there is anybody who will be able to give me the loss. It's very easy. I want to see people telling me the expected net assets versus the actual net assets. And then we see whether you guys will be able to get this answer correctly. Abracadabra, my students should be able to get this answer correctly. My students should be able to get this answer correctly. Abracadabra. My students are bright. My students are bright. They are always bright. Always. Always bright. All right. So all of us, are we getting like what these guys are getting? These guys are getting 28.98 or 29 precisely. You can see the 23.3. You can see with the 57.7 rounding off errors, of course, expected like that. Rounding off error expected like that. You guys are geniuses. You guys are geniuses. You guys are geniuses. I would want you to, basically, wherever you are, I would want you to stand up a little bit as I do this question. You stand up a little bit and you stretch. I want people to stretch, like seriously. Stretch for a minute. Breathe in deeply. Stretch. Is there somebody stretching there? Please stretch before I say you put on your cameras. Stretch before I say you put on your cameras. Because I'm so sure there must be somebody who is looking at me like, this is a thing. Today, Mr. Ure is sick or what? How comes this teacher today looks very, very tiny? No, it is you is trying to look at me using sleepy eyes. Sleepy eyes. So I would want you to awaken that great spirit from you. From inside of you, that great spirit has to wake up. So have we been able to stretch a little bit? Have we been able to stretch? Okay, you don't have to do it like this. Even if you're seated down, have you been able to stretch a little bit wherever you are? This is very important to me. It's the most important part of this class. Very important. Yes, they're saying yes. You've been able to stretch, and perhaps in this case, you're taking some like a quarter glass of water. A quarter of a glass of water. Very, very important to relax. We should not study this thing like we are studying rocket science. There is nothing hard here. Nothing hard. These are 1, 2, 3 very basic things. Unapata mwanafunzi ameweka sura mpaka anashika hivi mpaka hii inakunjana, hata anasoma vitu ngumu. Sasa kama uko unasoma architecture, unaambiwa uchore nyumba ya 55 floors, ulikuwa unafanya nini? Hapa hakuna kitu. Hii ni abracadabra. Nothing. 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 Very easy. Very easy. So in this case, ladies and gentlemen, what we shall do, we shall come and get, in this case, the expected net assets. Expected net assets. So the expected net assets we have here, you add these two. So we have here 23.33 plus 57.69. So what are you able to get here, ladies and gentlemen? Expected net assets. Expect 81.02. 81.02. 81.02. And then you come and compare this with the actual net assets. And the actual net assets, in this case here, we have this alone figure, 110. 110. So I can see in this case that our net assets have grown. So it's a gain. It's a gain. So a gain of what here, somebody? A gain of 110 minus 81.02. That's what they need to get at 28.98. And now this is a Forex gain, remember. It's a Forex gain. I like writing this as FX. I like writing this as FX. It's a Forex gain. So Forex gain, share it out immediately. Forex gain, share it out immediately to the two owners. So we have the parent and the NCI, and then you tell me whether you've been able to do that. You tell me whether you've been able to do that. You tell me whether you've been able to do that. All right. All right. Now, ladies and gentlemen, I would want you guys to do Mwalimu a favor. To do Mwalimu a favor. I would want you now to move with speed and give Mwalimu the NCI's working. This is the most interesting working. NCI's working. Now things are boiling down. Things are boiling down. Things are boiling down. Things are boiling down. Things are boiling down now. NCI working. NCI is working. things are coming down. Now we are looking at the NCIs, NCI at reporting. NCI at reporting, now we are at home. Remember, it's only Goodwill. You work with FX. You start with the FX and then you translate later. And then you translate later. Here's and gentlemen, for NCI, this NCI at reporting, now you take everything home currency. Home currency. Home currency. So this one I would want to pause a little bit and see whether we have even a single student who will be able to get this figure correctly. NCI. Usiogope. Nimekuambia hakuna rocket science hapa. Hakuna rocket science hapa. Hata ukikosea so what? Hata ukikosea so what? From that question about umefanya, like there is this student who has been able to give me a figure already. Tuone, nipatie dakika moja tuone. Rakadabra, don't fear anything. Write something. Already you have even a solution there before your eyes, but try to make some understanding out of it. Then I share with you even the answer that I don't punish. I don't want to punish anybody. I was not brought onto this earth to punish people. No. I'm supposed to be an enabler. All right. So let's do it together. Let's do it together. Let's do this together. Let's do this together. So of course we shall start with the NCI at acquisition. So NCI at acquisition, walikuwa worth pesa ngapi at acquisition? How much were they worth at acquisition? You're able to read that. You can read that. Was it 14 dinars? 14 dinars. Was it 14 dinars or 15? DN, DN, right? NCI. Is it DN or dollar? DN. So then we have to convert this. We have to convert this. Do we know the rate of exchange at acquisition? Do we know the rate of exchange at acquisition? Do you know the rate of exchange at acquisition? Oh, I'm alone now. I'm alone with some 3 girls here. Mostly Alango has spoken, yes. 3. So again, I'm dividing here. Now come here and give a share of PAP. Are you able to remember PAP? PAP, if I remember very well, it was 150 dinars. I like picking it like this. Was it 150? No. NCI, no. NCI was not 150. NCI got to what here, somebody, the PAP. The one that I told you to use the yellow highlighter. NCI got to what PAP? 15. 15. So then this one here, I should be able to translate this by which rate? Which rate should I use? Translate this PAP. PAP. Remember, it's profit. So it has to be average. It has to be average. Average, thank you very much. So 2.6. 2.6. Is there anything else that we are giving these people? Is there anything else that we are giving them? These guys, are we going to give them any shares? They are shareholders. Are we going to give them any shares of anything? Wow. I'm telling you, this guy calling himself M, were it not that he's hiding the name, I would have given this person a present. Because this person tells me that I should be able to give them, these guys, the FX gains. So we have FX gains, 2 of them. We have an FX gain on translation of goodwill, translated goodwill, and then we have in this case here foreign exchange gain on what here? translated net assets, untranslated net assets. So abracadabra, unfortunately, you had converted to dollars. You had converted this thing to dollars, remember. Remember, we shall convert. Those effects are normally converted. The effects are normally converted. Abracadabra, are you able to give us the effects on the goodwill? Effects on the goodwill. The good thing with students here, they are very aggressive. So Nancy is telling me, when we use 20.67 for goodwill. 20.67 for goodwill. 20.67 for goodwill. Are you sure? 2.07, right? Nancy hujachukua 10%. Nancy hujachukua 10% oye. Kumbuka hawa ni NCI share. NCI share. Remember, this is NCI. Maybe you can write there. NCI share is supposed to be 2.07. 2.07. I hope Nancy been able to see that. How about the NCI share of translated net assets, foreign exchange? 2.8, 2.9, 2.898, 2.898, 2.898. Abracadabra, let's get back here. Please give me these answers. Oh, yeah. Please give me these answers. Oh, yeah. Please give me these answers. Oh, yeah. Oh, yeah. V has already been able to give me the total, but I would really want you to give me this. LCI acquisition in 14 divided by 3. 14 divided by 3 in 14 divided by 3 ni ngapi? 4.67. So this is 4.67. Alafu nimeona pap. Yuko ameshanipatia pap already. Yuko ameshanipatia pap already. Pap amesema ngapi? Pap amesema ngapi? Pap 5.77. 5.77. Then give me the NCI at reporting. Give me the NCI at reporting. You add up everything. You add up everything. NCI at reporting, NCI at reporting, NCI at reporting. What do we have there? Is there somebody there who has 15.4? Is there somebody there who has 15.4? Why are you doing these workings? Because I know your examiner will give you a foreign subsidiary and will tell you easily. He'll tell you to do goodwill. He'll tell you to do NCI at reporting as separate workings, 8 marks. 8 marks. 8 marks. And that is when now you start shaking a tree which does not bear any fruits. All right. So I would want to take over something very, very interesting again before we look at our past paper. Before we look at our past paper, I would want you to give me the translation reserve. Somebody give me the translation reserve. What I'm going to take under equity. Under equity, I'll be having a new component because of the foreign exchange. I'll be having what we call the translation reserve. I'm giving you 1 minute. You calculate for me the translation, the FX translation reserve. The FX translation reserve. FX translation reserve. We shall have this FX translation reserve. Translation reserve. So then what do we have, ladies and gentlemen, here? We have the parent's share. Parent share of the Forex gain. Goodwill. How much was it? The parent share, Forex gain, goodwill. Parent for 7.58 M. For 7.58. Is that true? For 7.58. Or total. This guy is getting the total, but I would want just the goodwill is 18.6. So goodwill, I'm being given 18.6. 18.6. And then now we have net assets. But it's why is ability net assets. Net assets. The parent share, not full, but the parent share of Forex gain. 26.08. 26.08. 26.08. So please give me the total. So this will be the Forex translation reserve. That is the balance carried down. If we had a balance, this will go to the statement of financial position. If there was a balance in this case here at the beginning of the year, then we shall take the changes. We take the difference to the income statement. If it's a new item, then we shall be able to look at what here? We shall be able to look at the opening as 0 minus now this one, and then this is something you'll be able to pick with a question. For now, let's just leave it there. Translation reserve. So no, it is 28.98. Is it? 28.98. Is it? Is it? Is it? Is it 28 point something? 26. I'm seeing people saying it's 26. I'm seeing people saying it is 26. Who is telling me the truth? It is this one here. You can see here. 26.1 and 18.6, giving me 44.0. Of course, them, they have highly rounded off. They have highly rounded off. So could you kindly do me a favor? You guys clap for yourselves. You guys are great students and are standing up to here. You're great students and are standing up to here is not a joke. Standing up to here is not a joke. All right. All right. Thank you so much. So now I would want you guys to do me a favor. Please do me a favor. Do me a favor. Do me a favor. Do me a favor. And the favor is here. Great. The favor is here. I just want you to go through this particular question on page number 491. Page number 491. Parents and overseas. This question is so special to me. How I wish these guys were to give me a chance to test you guys. These are the kind of things I'll test. Nowadays, you don't need to do like even a whole group consolidation question. No. Simply give students quite a lengthy question, and then you ask them to do only 2 things, Goodwill and NCI. Those 2 things alone. And then you get somebody doing like the entire thing, and then they fall off the bus. So like in this case here, this is a very good question. You can see the relevant exchange rates are given here. Discuss how the goodwill arising on the acquisition of overseas should be dealt with in the consolidated financial statements of the parent group for the year ended 31st December 07. So they've given us quite a lot of stuff here. All right. And they want us to do something very easy. They want us simply to give them goodwill. And because the subsidiary is foreign, they would want us to go ahead and translate that goodwill. If there are any gains, we share out, and then we finish the class. We finish the class. All right. So then go to page number. I hope you have the book yourselves. I'll not be able to turn this thing. Page number 491. Page number 491. Please just compute the goodwill for me, and then we see. So parent is an entity that owns 80% of the equity shares of overseas, a foreign entity that has the shilling as its functional currency. The subsidiary was acquired on 1st X7 when its retained earnings were 6,000 shillings. The reporting date is 31st December X7. At the acquisition date, the fair value of the net assets of overseas was equal to the carrying amounts, with the exception of freehold land. The fair value of this land exceeded its carrying amount by 4,000 shillings. At the date of acquisition, the non-controlling interest in overseas should be measured at its fair value of 5,000. Goodwill at reporting is not impaired. Good examiner. Good examiner. Statements of financial positions for the 2 companies. Discuss how the goodwill arising on acquisition of overseas should be dealt with in the consolidated financial statements of the parent group for the year ending 31st December 07. Is it something that you guys think you can try? Or is it something you'd want him to do it for you? Is it something you guys think you can try? The good thing is you also do this, you're practicing. You're practicing on the other normal questions. They don't want you to consolidate here. They only want you to compute goodwill and then you advise us. They only want you to compute goodwill and then you advise us. Just imagine that. That alone. We can't try. Thank you. Let's try. And then we do it in class. Thank you very much, Paul. Thank you very much, Paul. Thank you very much. Thank you. So I'm only giving you 5 minutes. I'm only giving you 5 minutes. And I hope everybody has a copy of this book. So the student who posts this answer correctly, I think we should be able to reward them, you know. And the correct answer, I just want to post the answer here for some, I know I have some ninjas. That is not lost on me. I have some ninjas right now who are really struggling even to see me. So I think I would be better off displaying a solution for them. But I'll display it after, I'll display the solution after the 5 minutes are over. Is it possible for somebody to share the book again so that our friend M can see the question, because I will not be able to scroll throughout for him? Somebody simply share the book in the 2 groups. So would you want us to look at it together? Because I can see like 5 answers. It needs a lot of practice. Let's do it together, all of us. 80-90, thank you. Let me see, the answer is here. Goodwill at acquisition is supposed to be 59.99. And then we can see upon translations, great stuff. Oh, great stuff. Oh, great stuff. Great stuff. The good thing is that you guys will not come out of this with 0. That one I can assure you, you'll get something. Everybody is a winner. Everybody will be a winner. Everybody will be a winner. Everybody will be a winner. At reporting, Juliana got it. All right. Everybody is a winner. In my class, everybody is a winner. There is no loser. Including those guys who never wrote anything. You are still winners because you took time to read the question. You are a winner. You are a great ninja. You are a great ninja. Abracadabra, then we start right away. So we are told that the parent is an entity that owns 80% of equity of overseas. So of course we know that overseas is a subsidiary because 80% is controlling. Sorry. A foreign entity that has the shilling as its functional currency. So remember here, Kenya shilling, or rather the shilling here is foreign. The subsidiary was acquired on 1st January 2007 when its retained earnings were 6,000 shillings. The reporting date is like that. At the acquisition date, the fair value of the net assets of overseas was equal to the carrying amount with the exception of freehold land. The fair value of this land exceeded its carrying amount by 4,000 shillings. At the date of acquisition, the non-controlling interest in overseas should be measured at its fair value of 5,000 shillings. Goodwill at reporting date is not what year is not impaired. So they want me to give them goodwill. So they want me to give them goodwill. So then I'll look at the parent consideration. So the parent consideration, I have NCI's consideration at acquisition. So this will be like NCI's fair value at acquisition, of which they have told me. Yes, they have told me here. They have told me somewhere. At the date of acquisition, the NCI or interest in overseas should be measured at its fair value of 5,000 shillings. 5,000 shillings. So we have here 5,000 shillings. And remember, we are measuring this goodwill in form of foreign currency. And the foreign currency is a shilling, of which NCI's consideration at acquisition date is 5,000 Kenya shillings. We look at the parent. The parent, of course, has not been given to us directly. So I shall get it from the balance sheet. I will pick it from the balance sheet. I'll pick the payment that they made, the investment that they made, I'll pick it. It's here. You can see investment in overseas at cost. At cost, which is 38.18. Let me see. Paul has a question here. Paul has a question here. Paul, are you able to unmute yourself very fast and then you ask your question? Anytime you have a question, always raise up your hand like Paul has done. Paul, pretty fast, are you? Great. Can't hear you at all. Perhaps you have a problem with your microphone. Paul, are you able to type? Are you able to type the question? I can't hear you at all. We shall overcome. So here, ladies and gentlemen, we are told here, the investment that we had for the parent of the parent in overseas is 38.18. 38.18. Paul, if you can, please type. I could not hear you at all. But now remember that 38.18 is in the home currency, which is a dollar, is in the form of dollars. Is in the form of dollars. And I'm told here that the goodwill has always been computed. It's the away match, away, home and away. So this is away. The away one is the shilling. The away one is the shilling. All right. So in this case, then I would need which? Yes. Hello, now I can hear you, Paul. I wish you type because again you've disappeared. Or is it my microphone which has a problem? Are you guys able to hear Paul? Oh, is it my microphone which has a problem? No, they're saying no. Are you able to type? Are you able to type, Paul? Are you able to type? Just type your question. Because now there is no other way around. I can see I have 10 minutes because I have another class. Just type. You know, if you don't mind. So you can see here, this 38.18 is in dollars. And I want it to be in terms of the shillings overseas shillings. So remember this investment at cost, the cost was made at acquisition. So I need the acquisition rate. And the acquisition rate, ladies and gentlemen, that we have here, you can see the acquisition rate here is 5.5 shillings to the dollar. The way it is written, it can really confuse you. This 5.5 shillings to the dollar, 5.5 shillings to the dollar. So we have here 5.5 shillings to the dollar. Shillings equals $1. How about $38.18? So in this case here, we should multiply. If you cross multiply, so this will be times 5.5. Yes. Yes. Paul, please, if you can, we cannot hear you very well. Are you able to type, Paul, please? Because yours is not really coming up I'm hearing like one or two words. I can't hear you at all. Are you able to type, like, for example, is it something you're not able to understand? Great. So in this case here, 38.18 times 5.5, what do we have? 29,999. A beautiful figure. 29,999. So then what is the total consideration? What is the total consideration? 25,999. You come and less net assets. You less net assets at acquisition. Net assets of the subsidiary. You begin with share capital. This one doesn't dance, so I can't talk of share capital acquisition. This one is normally the same. So share capital, are you able to see? This slide is not very nice. So share capital, I'm being given a figure of 10,000. Share capital, I'm being given a figure of 10,000. Do we have share premium in the question? No. Alango is confusing here. Alango. We started this topic long time ago, Alango. Here we are looking at, we are not consolidating. When you are consolidating is when you talk of a parent only. Here we are not consolidating. We are measuring the value of what here, somebody, the value of the subsidiary. So everything is about subsidiary. But when you are consolidating them, we shall be able to go and look at parent only. Here we want to consolidate. You're consolidating. Alango, are we together really? Look at this, net assets of subsidiary. So good you brought up that, but that tells me, Alango, you are not reading after class, but we shall overcome. So do we have any share premium? If you look at this, you can see it's only share capital, no share. So we have retained earnings. So we have retained earnings here. As I work on my retained earnings, this one you must talk about retained earnings at when? At acquisition. Have they given us this figure, retained earnings at acquisition in form of shillings? 6,000. Somebody's giving me a figure of 6,000. Somebody's giving me a figure of 6,000. What else am I supposed to bring here as a net asset? What else am I supposed to bring here? Any reserves like revaluations. What we call fair value adjustments, yes. Fair value adjustment. So come and give me the fair value adjustment. Fair value adjustment. So fair value adjustment, we had, yes, some asset that was adjusted upwards. By how much? By 4,000. I don't think we have got any other matter. We need to come and subtract here. We need to come and subtract here for us to get land. Yes, land. This is a fair value adjustment, which was actually land 4,000. Thank you for that. Thank you for that. So you subtract. Nancy is giving me 59,999. 59,999 Kenya shillings, or like shillings. 59,999 like that. So then we have goodwill at acquisition. We have goodwill at acquisition. This goodwill is 59,999. There was no impairment at all. 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 No impairment in the question. No impairment in the question. Impairment 0. Impairment. No impairment 0. So in this case, we are able to get goodwill at closing, which is 59,999 like that. We shall. And then now you look at what we call translated goodwill. Go ahead and translate this. So translated goodwill, translated goodwill, translated goodwill, translated goodwill. So we shall come here and take goodwill at acquisition. Goodwill at acquisition, 59,999. Then we have impairment loss, 0. And then we have goodwill at closing. Goodwill at closing, or 59,999 like that. Ladies and gentlemen, then you will have to give me the exchange rates to use. Remember, these are in shillings. Shillings. So remember, goodwill at acquisition. Do we have acquisition rate? Do we have acquisition rate? Do we have acquisition rate? Nancy is giving me 5.5. According to Nancy, the acquisition rate is 5.5 here. Shillings to the dollar. So acquisition rate is 5.5. 5.5 shillings to $1 equals $1. So the question is, how about these Kenya shillings? How about this 59? How about this 59,999 shillings? So that it will be this times 1 divided by. So it means I'm dividing by 5.5. Have they given me the average rate? Have they given me the average rate? Divide. Thanks, Wendy. Have they given me the average rate? Just for our own revision, it'll be important for us to maintain it there. So average rate according to a language 5.2. How about in this case here, closing rate? Goodwill at closing. Closing, M gives me a figure of 5. M gives me a figure of 5. M gives me a figure of 5. Now from there, do your abracadabras of expected versus what you're closing. Expected versus closing. Do your abracadabras of expected versus closing. Abracadabras of expected versus closing. Are you able to give me these figures pretty fast? Who is able to give me these figures? I know this is 0. How about this? 59,999 divided by 5.5 divided by 5.5. Aha, according to FPK, 1090. Thank you. 1090. How about the last one? 59,999 divided by 5. 1090.72. Immaculate wants us to be very accurate, which is very good. 0.72. Closing is 1199.8. 1199.8. 1199.8 like that. So the 2 here will give me the expected goodwill. So we have here expected goodwill. Expected goodwill. So expected goodwill, what do we have here? Expected goodwill, I will take this plus this. It will be 1090.72 plus 0 for revision. That's 1090.72. And then we have the actual goodwill. The actual goodwill is 1199.8. 1199.8. So please, I can see again, because it's an asset, I can see again over how much? 109.08. 109.08. 109.08. Thank you, Lucy Ann Wentiro. 109.08. 109.08. So are you able to apportion this to the parent and the subsidiary? Are you able to apportion this to the parent and the subsidiary? Are you able to apportion it to the parent and the subsidiary? Pata Potea? Woye. You know the parent has 80%, isn't it? The parent has 80%. The parent has 80%. The parent has 80%. So then the group will take about 87. The group will take about 87. The group will take about 87. And LCI will take about 22. Like this. You know, the way they do it, you may not be able to understand it very well. The way they do it, you may think it's a very complicated thing. But at the end of the day, we get these figures 109, 87, and 22, which now marks the end of our today's class. Now, for the evening students who are guests here, I know your approach could be, Mwalimu could be using a different approach a little bit. Of course, I expect his approach to be quite similar to mine because Norbert was my student. But of course, again, somebody at the end of the day, they can't teach like you exactly. They'll also get, other ways, actually even better ways. But have you been able to follow what I've done? What I've been doing? Have you been able to follow this evening ninjas? The ones who welcomed here today, have they been able to follow? Amamora Giza. Juliana understood. Have they been able to? Great, very good, great. I'm surprised then. Great, Nancy, great. Yeah, Akosawa. He was my student. Most of the teachers around are my students here. Were my students in the past. Asante, nimeelewa translation for the first time. For the first time. All right. Yeah. That's very much in order. Otherwise, thank you very much. I happen to be having another class coming up. It has been a pleasure hosting you. Great. So, kesho asubuhi. 5 a.m. Thank you. All right. Yes, I will make arrangements, Paul, to host you guys also in their class, maybe weekend. It's good for you to compare. Very good. Thank you.